Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec from Bloomberg Radio.
Shares of Broadcom did give some juice to the trade, and it continues to soar. It's pretty much saying at its best levels of the session, up 22%. The stock hitting a $1 trillion valuation for the first time after predicting a boom in demand for its artificial intelligence chips. So with what you need to know, we've got an incredible duo. We lean on them so much when
They're
it
like
comes
the most
to
popular guys today around.
I don't even know if they got any sleep. Man, I've just seen every time I look up at Bloomberg TV or I look at the radio studio, they are talking to folks. Kunjan Sobhani, Senior Semiconductor Analyst at Bloomberg Intelligence, and also with us is Ian King, U.S. Semiconductor and Networking Reporter at Bloomberg News. We are so lucky to call them ours, so we get to lean on them, both joining us from our San Francisco bureau. Ian, I do want to start with you. Broadcom's quarter. What is the nut that investors are so excited about? Is it the outlook? Is it the AI? What is it?
Well, I mean, I'm sure Kunjan will give you better analysis than I could, but really the report was kind of okay. The forecast was okay. But what happened on the call was that the CEO gave a long-term projection for its kind of most important AI product that is kind of off the charts. And that really got everybody very excited about the future of this company and kind of pointed to it as a whole different company in terms of the scale that it can achieve.
Kunjan, come on in here because we spoke to you yesterday after the numbers came out. Shares were kind of all over the place. They actually fell for a second, but up about 2%. Nothing like what we're seeing this morning. Certainly there were some price targets that were raised, but it was all about what was said on the call, right?
Yeah, it was all about AI. I mean, just to put things in perspective, they did $12 billion in AI revenues. I mean, beyond NVIDIA, when we look at the size of AI chip revenues, there's nobody else. Even AMD is lagging if you just look at pure AI numbers, right? And we have been talking about AMD for a while as the number 2 GPU provider. When they gave out this guide, now estimates are going somewhere between 25 to 30 billions in 3 years. Again, that size of that growth for a company like this, that's something we have only seen happen just with one name so far.
So Kunjan, and I know we talked about this with you and Ian, I believe yesterday, but I want you to put it out for the Bloomberg audience again. Where is Broadcom in the AI chip puzzle?
Yeah, so they have two big AI businesses. One is called the custom ASICs or the custom silicon, where they help these large cloud and hyperscale customers like Google, Meta, Amazon, Microsoft design their own chips, which we have seen a trend that everyone is adopting. And the second piece is the AI networking and connectivity. So think of the IOs, the basically highways and the pipeline that connects all of these GPU and CPUs together in the data center.
Hey, Ian, come on in here because as you point out in your story, Broadcom got to where it is today by making a series of acquisitions over the last few years. More acquisitions in the future, now that we're seeing the value of Broadcom continue to surge. Give us a brief history of how it got to where it is today and what you think could come next when it comes to acquisitions.
Yeah, I mean, Hock Tan started off this company by basically with the small division of what was spun off from originally HP years ago and sort of made this kind of sequence of deals where he got bigger and bigger and bigger, and then eventually even branched out into software. And now we've got one of the world's largest chip companies, and it's pretty high in the ranks of software makers as well. And as we learned yesterday, he's not finished.
It makes me think about, and I know, Ian, we've talked about this with you a lot, Kunjan too, just like what's going on with Intel, and then you look at some of these other chip companies. Having said that, I feel like we've started to talk about NVIDIA and people going after that. Kunjan, let me bring you back in here. Who does Broadcom have to be worried about, or do they not have to be worried about? Is their position in a pretty good place ahead of maybe their competition at this point?
Yeah, so specific to AI, I mean, it has been usually a duopoly in this market between Broadcom and Marvell. Broadcom has usually held somewhere between, say, 60 to 80% market share. We think that's going to stay in the same range in the future. Again, Marvell is another up-and-comer here who is making strides with the same customers that Broadcom is announcing, or the same set of customers, I should say. So we expect these two to continue dominating the AI custom silicon and the AI networking space going forward.
Ian,
yeah, go ahead.
Well, Ian, come on in on that too, like how you see it in terms of, what I asked Kunjan as well. If you have anything to kind of add to that.
Yeah, no, that was a key part of the call yesterday.
Yeah.
I mean, they gave this market size as well, maybe as much as 90 billion, and people were like, okay, so you've got these two new customers that you're not telling us who they are. How does this all factor together? Is this happening on your existing customers? You've got two new customers. Are you going to have 100% of this? And all of these kind of flurry of questions. And Hock Tan was basically, the CEO was basically smiling and saying, well, there's room for everybody, but we think we're going to do quite well within that. And he's right. I mean, as Kunjan said, they are the best game in town, the kind of default choice. If you want a custom chip for your own data centers, you're going to go and ask them to help you to do it right now.
Yeah, we should note Marvell Technology up right now by 9.3% in sympathy with Broadcom's results. But Marvell, only about a $100 billion company, still about neck and neck when it comes to performance this year. Both companies up about 100% so far this year. Kunjan, weigh in on the idea of acquisitions moving forward for Broadcom. Ian mentioned that, and he mentioned in this story too, that this is a company that got where it is today as a result of making acquisitions. At Bloomberg Intelligence, are there any names that are on your radar about companies that could be acquired by Broadcom in the future?
Not at this moment. I mean, look, Ian answered it spot on. I also come originally from Broadcom. I was part of the acquisition when Hawk acquired Broadcom. So, I mean, we do expect him to continue staying acquisitive. That's how he's really made his name. But when you look at the size of the past acquisition, each larger than the previous one, they don't tend to go and do small tuck-ins, right? So I think at this moment, like Ian said, they are going to focus on paying down debt first and then start collecting a bigger pile of cash, which they can then go out and do a bigger deal. Now, when you think about candidates with that size, there's not a lot left in the semi space, and regulation, at least in the semi so far, has not been as generous.
Hey, so Kunjan, wait a minute. Did you just drop a ball on us? Like, did you work for Broadcom? How did we not know this?
I did. In my past life, I was an engineer and I used to work for Broadcom.
So what do we need to know? Any inside stories here?
Not anymore.
Fair enough. Hey guys, one of the things I thought about after this quarter, and this is what we do, right? We get one earnings and we get an outlook and we get a call and then we're like, okay, next quarter. So Ian, does what we got from this company make the next quarter or next couple of quarters even tougher in terms of expectations?
He was very careful to set expectations appropriately and said, look, these are just big customers. These big projects take time and they are frankly lumpy. So that's why they gave this 2027 target. And then he kind of gave us sort of a soft target for the whole of next year, which wasn't a massive increase from, sort of 15 to 20 in terms of the available market. It was very vague, but there was some very careful signaling there to sort of say, hey, look, you need to keep your eyes on the long-term growth potential here, not get sort of too tied up in the quarterly sort of machinations that we're going to see going forward.
We never do that. Kunjan, just saving you 20 seconds here. How are you thinking about what's going to be on your radar when it comes to this company in particular?
I mean, like Ian said, I don't think investors should look at this quarter to quarter. I think we've just gotten a bad habit of what NVIDIA has set a precedent. I mean, these are, again, handful of customers, like you can count on your one hand, right? Their buying patterns will go through, which is very normal, through some kind of timing and digestion. So we should look at it, again, from a year-to-year milestone post.
All right, some good advice, because it's true. We get kind of caught up in day-to-day stuff, and sometimes you have to do the longer-term perspective. Guys, thank you so much. Have a wonderful weekend. Kunjan Sobhani, Senior Semiconductor Analyst at Bloomberg Intelligence, along with Ian King, U.S. Semiconductor and Networking Reporter at Bloomberg News. Incredible on this space, both of them, and joining us there from our San Francisco bureau.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
All right, we do want to get to today's Bloomberg Big Take. It's a story that is part of several on the global fertility industry that our Bloomberg News team has been looking into. To tell it, it took an editorial village of Bloomberg reporters. The tale, the reality, included following a teenage girl in India lured into selling her eggs, a model in Argentina whose genetic makeup is prized, a mother in Greece told by police that her eggs were stolen, and two egg girls from Taiwan who have put themselves at risk to earn money in the United States. We had a lot of questions, and I bet so do you.
Yeah, so stop what you're doing because you want to know more. The entire read, it is a long one. It is worth it, and it is with good reason. It can be found on the Bloomberg terminal and at bloomberg.com/businessweek. Here with us is Bloomberg Businessweek senior investigative reporter Susan Berfield in our Los Angeles bureau. Susan, we're living in really interesting times because the whole idea that this medical process can be undertaken is actually relatively new here. Let's take a step back and just give us an idea of the fertility industry here in the US globally and what it is, how big it is, and then we'll get into some of the details in the story.
Yeah, thanks so much. So the fertility industry globally is worth about $35 billion, and it's growing. And that's in part because there is new technology that allows eggs in particular to be frozen, to be stored, to be transported, and to be transplanted. And at the same time, as probably a lot of people know, women are delaying having kids, and that makes it harder to get pregnant. And that's because human eggs decline in number and quality in a woman as she ages. And so that is one reason that the demand for eggs from younger, fertile women has been growing. And that's what we set out to try to capture. Who's providing those eggs, who's buying those eggs, and how the flows work transnationally.
All right, so I am curious about how you guys went about finding these individuals. And when you talk about, eggs when you're younger, being much more productive, right? This story gets into, though, tapping into or accessing very young women, girls, right, to get access to their eggs. I mean, this has become a commodity, and as you guys say, a premium commodity.
Yeah, I think, one way to think about this, and it probably, makes some people uncomfortable, and I think that's fair, because this is a really emotional issue where people, especially, those trying to get pregnant, are at their most vulnerable. These aren't easy decisions to make for anybody involved. But, what we found is that because there is an increasing demand for eggs, you could consider them a very precious and scarce resource. And as with any resource, that presents opportunities for both people to benefit, and by that I mean both the women who voluntarily sell their eggs to make money, to help people, obviously the would-be parents who are getting the eggs and the chance to have a baby, but it also presents opportunity for exploitation. And that's also what we documented. Well, and when you're talking about young girls, that's what you're talking about.
Exactly, and I want to get into, and to be fair, I think we've all been on a subway and seen the posters that said, you can sell your eggs, essentially. And we were actually having a conversation in the newsroom around your story. So to be fair, there's a legal, everything's on the up and up, and then there's some that you get a little bit questionable. Let's go into, because it does seem like often when we're looking at, tapping a precious resource, it often leads us to emerging markets. And that's one of the things that struck me about this story, because this does as well.
That's right. So, what we found is that for some clinics, for some parents, for some agents, the people who are connecting these donors, we call them donors, though, most of them are getting paid, but the term the industry prefers is donors. And because people can make money selling their eggs in the US and elsewhere, it opens up the possibilities for what you could say is like economic coercion. And I think what we were trying to look at is, how does that play out in countries where, both the chance or the necessity to sell your eggs can bring more money than women might be able to make in lots of other ways. And that brings a pressure that we wanted to explore.
Can you talk a little bit about how the story opens and the one of the first chapters about a young girl in India and her story, and then we can talk a little bit about how this story totally spans the globe, and the Bloomberg newsroom and how a global newsroom is able to capture stories such as this?
Sure. So, the young, really teen, the teen in India who we write about, agreed to sell her eggs, but really was too young to understand what she was doing. Even still doesn't quite, understand that there, could be children out there who were born from her eggs. She, herself says that, she wanted a mobile phone and was offered a way to make the money by other women who were agents and who were recruiting women or young women like her to sell their eggs. And this is, I think, a pretty egregious case. Teenagers are not supposed to be donating eggs in India, where she lives. The law requires women to be 23, but she was kind of recruited into a network of women, mostly, who had set up an entire way to almost fool the clinics. It was probably also incumbent upon the clinics to ask more questions than they might have, or to probe the answers a little bit more than they were getting from the young woman. But she didn't do this on her own. She was recruited into a network.
One of the other stories that you get to is, and I feel like this is where Bloomberg and Businessweek does so well, is that you get very specific and you tell what has happened to these individuals. You talk about a woman in Greece, Maria, she goes by a pseudonym, but again, was harvesting eggs for herself, right?
That's right.
And then it turned out, she found out that wasn't just the case.
Yeah, this was, Maria, as you said, was seeking IVF treatment for herself. That included, as it often does, the kind of stimulation process that egg donors go through, which is about 10, 12 days of regular hormonal shots to increase the number of eggs that a woman can produce, called superovulation. So Maria went through that, went through the retrieval process, which requires going under anesthesia, and her eggs were extracted. She was told that she produced a certain number of eggs, and ultimately she did give birth as a result of this extraction and the retrieval and the IVF. But later, she was told by the police that some of her eggs were given to another woman. And the clinic at the center of this is under an investigation. So Maria doesn't know and doesn't know who the woman is, doesn't know the result of it, but she knows that some of her eggs were given to another woman without her consent.
When I was reading this story, Susan, I was thinking about the different regulations in different parts of the world when it comes to this medical procedure. I mean, at the end of the day, we're talking about medical procedures here. We're talking about drugs. And the way that the industry is regulated is different in many parts of the world. Here in the U.S., what do we look at with the regulatory environment, and what should people think about here in the U.S. who are listening to this, watching this, have read this story, when they learn about procedures such as these?
Yeah, like how do you trust your doctor who is doing the extraction, he or she, to trust that they're just taking eggs for yourself?
Oh, well, so, as you said, different countries do have different regulations, both about what's allowed overall and, how donors are treated. In some places, in some countries, donors must remain anonymous. In other places, donors must be identified. In the U.S., the FDA does have some restrictions on who can donate and requirements for them. There is an industry trade group that puts forth guidelines for how care overall is supposed to be provided, how egg donors and sperm donors are supposed to be treated. What we found is that those are guidelines. They are widely accepted, but there isn't really a way to enforce those guidelines. So we don't want to suggest that the industry in the U.S. is dangerous in any way. What we were looking at is cases where there had been problems abroad, and just we want people to think about how this is all happening. Sometimes it's happening quickly. Sometimes as rules or circumstances change in one country, the entire market might shift to another country. And so I think probably we're all familiar with people who might travel elsewhere for fertility services. In part maybe it's cheaper, in part because maybe they do have more access to eggs or to surrogates. And so our aim is to kind of reveal this global network that exists, and to have people think about where this most precious resource comes from and goes to.
An incredible read, you and the gang. Bloomberg Businessweek senior investigative reporter Susan Berfield. Check it out, BloombergBusinessweek.com and on the Bloomberg terminal.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
So we've been talking a lot about big tech this week. We did see quite a rally as a result of the big mega cap tech names. Tech also, we've been talking a lot about AI. Cisco is also an important company that we keep checking in with. It's the biggest maker of computer networking equipment, a bellwether for corporate tech spending. Last month when it reported earnings, the company's CFO saying that the company is seeing a strong rebound in spending by corporations across all sectors and geographies. It's also benefiting from spending on the machinery needed to support AI computing. And then earlier this week, we caught up with one of the senior members of the Cisco executive team, Fran Kasutis. Today, we have another member of that team. Joining us from San Jose, California, where the company is based, is Liz Centoni, Executive VP and Chief Customer Experience Officer at Cisco Systems. Liz, good to have you back with us. How are you?
I'm doing great, Carol. Good to be back as well. How are you?
I'm doing well, trying to keep up with the news flow. There's a lot of AI stuff this week, which we're going to talk about with you in a moment. You do have a job change. You recently served as Executive VP, Chief Strategy Officer. You're also GM of Applications at Cisco. You've been at the company a long time. You've got a new job. Tell us about it and what kind of vantage point this job now gives you and kind of builds on your other experiences.
Yeah, I almost 25 years at Cisco and always in product development. So this is absolutely new in terms of going into customer experience, where it's not just developing a product, but it's also around how do we take the customer through their entire journey from how they use our product to how we support them. Customer experience is about a third of Cisco's revenue. Probably not as well known, but we are involved in every stage of the customer journey, right? Right from when they purchase it, to adopt it, to the renewal life cycle, to supporting it as well. So I would say is bringing in the product development expertise, the relationship from product, bringing that into this phase of customer experience, and going back as a full loop in terms of, it gives me an opportunity to bring that experience, but also be an advocate for the customer as they use our product and through, kind of the full life cycle. Something usually I didn't get to see as much when I was in product development.
I have to say, I remember when I first met you, what I loved about you is that you were in product development too, that you understood the product, right? What goes into it, what's needed. You understand the core business, and then being able to now talk with customers about what they need. What I want to ask you is, how often when you have a conversation with customers, does something AI related come up?
Pretty much all the time, because I just got back from New York late last night and spent a week with customers, mostly in the financial sector. And it really was, every conversation is around AI, because what they want is they want us to know them better than they know themselves. right? So what does that mean? It's almost like, hey, Cisco, you got all of my data. We trust you with our data. You've got this massive amount of data. And, I'm paraphrasing them, Carol, but they're looking for us to deliver like meaningful, curated, and personal, kind of purposeful experiences that accelerate the value of the technology that they purchased from us, right? So they're looking at us and going, yes, you've got chatbots, you've got AI assistants, but now with Gen AI, those can get a lot more sophisticated. And how do we enable them to get immediate and maximize the value from the technology, but also how do we use this data that they have to keep their environments highly resilient and secure as well? So they're looking for, hey, take the data, analyze in real time, contextualize it, give me a personalized, tailored experience just for me. Now think about doing that across hundreds of thousands of customers, right? So a personalized experience. And that's what I hear from, go beyond transactional, be more proactive, get ahead of my issues, make the promise of predictive insights and recommendations work. Those are all the things, when we talk about the AI party, there's some real ROI driven, both for customers and us, in terms of real use cases in AI.
Let me ask you, with the financial folks that you are talking to, certainly our bread and butter here at Bloomberg, and we think about the financial community so much. But having said that, are they starting to see return on investment in AI-related purchases? Are they seeing it already?
It depends. It depends on the technology, on the use cases. And I would say it's a mix, Carol, because we did an AI readiness index last year. We just released, or we will release the new one a year later. And what we're seeing is that in the 6 areas of strategy infrastructure, whether it's data governance, talent, and culture, only 13% of companies were really prepared for AI in 2024. And that was a decrease from, you can say, it's a little bit of decrease from 2023. So there is a gap between the needs and the expectations. And it's not just about the use cases. The networks are not equipped to meet the AI workloads. So you've got to upgrade. Only 21% of organizations say they have the necessary GPUs to meet the current and future AI demands. So it feels like there's intent there, but it's taking a lot longer to be able to implement it.
Hey, Liz, good to see you again. Tim here.
Good to see you, Tim.
I'm curious about where you think we are in this tech cycle, given your more than 2 decades of experience at Cisco. You weren't necessarily there, in the bulk of the 90s when we saw the run up, but you were there during part of when the bubble popped. And I'm wondering if you can see any parallels to right now with AI, or if you think this is something completely different.
I feel like this is quite different, Tim, in terms of the pace at which the technology is being developed and being put out there, right? I haven't seen anything move at this level of speed. I'm constantly experimenting with different kind of tools and capabilities, and I still feel I'm far behind, and I'm in the depth of it. But what I've seen is, like, with the vast majority of our customers, there is a gap between the technology that's available and going from experimenting with something to real use cases. And I think that for the vast majority of our customers, they're still in that early part of the real use cases. And
does this go on for a while, Liz? Do you think this kind of experimental phase goes on for a while?
I would say 2025, we should see a little bit more of a, where there's a curated set of use cases, whether that's revenue generation, whether that's automation or efficiency. I would expect that to pick up, Carol, in 2025. Will it reach like a big hockey stick? I don't think so. I think it's now where we need to show kind of how do we actually measure this. And not everything is quantifiable, but you need to have some quantifiable use cases along with the others. And it's also the pressure from C-suite and our boards as well, right? Yeah. They expect a lot of this to happen immediately. And some of this is long-term, return on investment.
How long? Like, are we talking, years here? We talk a lot about CapEx, especially with the hyperscalers, but when you think about other infrastructure investments, like, making an investment with a company like Cisco, how long does it take for something like that to pay off for your clients?
I would say in the areas of what we're talking about around customer support, for example, and how we're able to help keep their environments much more resilient, I see that in more for 12 to 24 months. If you're looking at revenue generation and kind of how do you get more competitive for their end customers, I think that's a little bit longer. That's more in like 2+ years out.
Okay. Hey, can I ask you?
But automation and efficiency,
yeah,
I would say 12 to 24 months for sure.
Tim and I were recently at the Schwab Impact massive financial conference out in San Francisco, and it was all with registered investment advisors and all of the companies that service them. And I was involved in a panel that was all on AI, and one of the things that came up was autonomous agents, which is something I haven't heard about. And I feel like this is going to be something that's going to be a big part of our conversation in 2025. We've got about a minute and a half left here. What do we need to know about what that is in terms of AI and how that kind of fits in?
So think about use cases like summarizations, very easy, right? Those are AI assisted. Think about like chatbots, for example. Those are augmented AI. Think about in the future where not just some of the tasks, but some of the jobs that are being done can be where an agent can think, reason, and make independent decisions. Doesn't need to necessarily say that you've trained it to make that. It's almost human-like and could take actions. So I think that's an example we've talked about self-healing networks for a long time. Mm-hmm. You can identify potential issues and resolve them autonomously without any human intervention. We're experimenting with that right now.
How's it going?
I would say is accuracy, ethical AI, all of those become a much bigger deal when you're talking about autonomous agent without any human intervention. So I think that would take a little bit longer because we want to make sure that ethical AI plays a big part of it so that we can continue to keep what customers expect us to do. We want to hold their trust in us.
Yeah, listen, I just got chills up my spine. But I think we had a conversation with our Linda Wan earlier about the importance of an abundance of the right data to keep AI development moving forward. And especially when we talk about agents and AI, I think that's going to be super important. I know we'll be coming back to you. Congratulations on the new job, and look forward to next time. Listen, Tony, Executive Vice President, Chief Customer Experience Officer at Cisco Systems. Tim, we're driving toward the close.
I want a little chatbot that can kind of automatically do our script that we do every day.
I want that one. I'm hoping that I don't want one that can be, breaking news, let me break it for you.
Exactly, yeah. We got to break the news.
You still need us to
We got to break the news.
Stick around, everybody. You're watching Bloomberg Businessweek. This is Bloomberg.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we are just under about 18 and a half minutes left in today's trading session, getting ready to wrap up the trade and the week. We are, as Denise just mentioned, well off our highs of the session. Still the NASDAQ 100, the standout. Thank you very much, Broadcom, really giving some juice to certainly that
Do you
name.
see Marvell, too?
Yeah. Well, everybody, right? The peers.
Well, they're peers, yes, but as I will say in my decliners today, not everybody in this space
that's true.
is having a good day.
And some of them popped initially and then kind of
Yeah,
pulled
NVIDIA
back.
popped initially, but now it's down more than 2%. Marvell is up 10.6%. This is a $100 billion company that has basically performed the same as Broadcom this year, Marvell.
Interesting, right?
Yeah, it's really interesting.
I feel like all of a sudden these like chip-related, AI-related companies
everywhere
that we
in the
haven't,
supply- in the
but that we
chain
haven't
of chips.
talked about a lot, and then all of a
Totally.
sudden they're certainly front and center. Hey, another thing that's been front and center is the private markets.
Yeah, kind of understanding what's happening with the private markets as we get into a new year, a new regime, understanding interest rates next year, because that certainly has a big effect.
Yeah.
Let's get to Erik Hirsch, co-CEO at the investment management firm Hamilton Lane. It specializes in private markets. Erik joins us from Pennsylvania. Erik, good to have you with us this afternoon. How are you?
great, Tim. Carol, nice to be with you.
Nice to see you and hear you again.
Hey, Erik, how are you thinking about, like, what was the year, before we get to 2025, what was the year that was 2024 when it came to the alternative investments, the private markets, given that we didn't get as many interest rate cuts as many investors a year ago thought we would?
I think it was a mixed year. So I think if you look across the asset class, the private credit sector had a very strong year, a lot of capital raised, a lot of capital deployed, very, very strong performance. The equity side of the business has sort of lagged sort of the public markets. When the public markets are kind of on fire, as they've really been for most of this year, private equity, again, longer asset class, longer duration, kind of struggles to keep pace. And you certainly saw that. So performance on a year-to-year basis relative to the public markets, I think, was a little bit disappointing. Infrastructure posted some good results. And so, again, if you look across the totality, a little bit of a mixed situation.
Hey, you know, I think about this column, especially when it comes to private equity, which has been under some pressure over the last couple of years because it hasn't been able to exit, right? The exit strategy and the ability to return, you know, money and returns to investors. Our Allison Schrager wrote a Bloomberg column over the summer, the private equity bubble is about to deflate. Again, an opinion column. But she talked about, you know, whether valuations fall suddenly or gradually, the industry is due for a reckoning and the consequences for the economy are dire. I mean, when you can't really price something in a market, that's a problem.
So let's break it down. I think the exit piece has been a little bit misunderstood. So why haven't we seen a lot of assets trading? The reality is that because most of the assets are still relatively young. If you think back when we saw a huge surge in deal volume, it was right in the middle of COVID, and pricing wasn't cheap then. So you had a lot of assets that were acquired at fairly full valuations. And if you think about our industry over a long time period, it's averaging about 5-year duration from time to buy to time to sell. So we really are now just kind of coming into that window. And if you think about how private equity is actually generating returns right now, it's not that they're buying super cheap, and it's definitely not that they're super leveraging these assets. They have to fundamentally grow earnings, and that takes some time. So that, to me, is really the biggest issue of why haven't we seen a lot of liquidity. It's because the assets just simply haven't fully ripened yet. I think we will start to see more of that next year. Now, the second part I would say is you want more stability. This year has not been a particularly stable year. So let's leave aside sort of the public equity markets have performed strong. We've had tremendous amount of geopolitical uncertainty. We've had a whole uncertainty in this country around the election, what was going to happen with that. And so buyers and sellers were kind of having a bit of a standoff on, is today the pull to trigger? And what you saw was, no, it's not. I think now that we at least know the election outcome, now that you see some real signs that are encouraging on potentially ending some of the geopolitical instability, I think you're going to see buyers and sellers get more aligned. And so I think you kind of combine all that together, coupling with the aging of the assets, and I think you're going to see a lot more exit activity next year.
All right, interesting. Yeah, we have heard about maybe an uptick in M&A overall and getting out. Having said that, I mean, we've had you look at the gains that we've seen in the major equity averages. I mean, it's been a really strong year. If that doesn't, and that's 2 strong years for the S&P 500, if that doesn't continue in 2025, is that problematic for the exit?
I think one of the things we hear from investors is that everyone's getting a little bit more sophisticated. And so they're saying, well, the S&P 500, yes, as an index, had an amazing run, but it's really driven by still a small number of businesses. And I think when you look at kind of this over-reliance on index, passive, sort of cheap public equity strategies, I think a lot of investors are getting a little bit more sober on how concentrated their portfolios are on an underlying basis. And so I think the driving of the performance notwithstanding, I think there's some real hesitancy about the concentration. That is one of the things we're seeing as a real drive into the private markets, is that they're simply looking for diversity. It's not even so much that they believe that they're going to make way better returns. It's just simply they don't want all their eggs in one basket.
I will point out about 362 names in the S&P 500, though, are higher this year, and it's pretty broad. We did see some broadening out of the market.
Yeah, we did. I wonder what things look like. You already mentioned a new administration and some potential effects of that starting January 20th. What about on the regulatory front and on the interest rate front? How does that look for your world and the privates?
So let's take those pieces. I think on the interest rate side, I'm not expecting to see a ton of movement either way. I think you still are seeing some inflationary signs. Yes, it's cooling, but I don't think any of us would argue that the world has gotten cheap today. And so I'm not sure that we're going to see enormous pressure to kind of further cut rates or cut them dramatically. So I think that feels like we're in a bit of a status quo situation. On the regulatory side, I think where you could see some potential easing up, yes, around the M&A market, yes, potentially around sort of a less onerous sort of merger doctrine. That could certainly do a little bit around the edges. I think the space to watch is really what the administration does, if anything, as it relates to sort of opening up access to the asset class even more to the individual investor. So I'm not even talking sort of a 401k access side, but even think about lightening up a little bit so that you could see a much more easy inclusion of private markets and things like target date funds.
Yeah, no, listen, people are constantly seeking for some outperformance. I think many would argue we need a little bit more oversight too, though, and transparency within the private markets to make sure that, everything is clear, especially when you're talking about retirement.
Yeah, and I don't know if there's necessarily, who is it? Warren Buffett always says only invest in what you can understand.
Yeah.
And I think there are some concerns, certainly.
Peter Lynch used to say that, like over at Fidelity too, right?
Yeah.
Interesting stuff, though. Always appreciate his perspective. Erik Hirsch, Co-Chief Executive Officer at Hamilton Lane.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.